My name is Chris Render. I'm with Hardesty Homes, and thank you all for coming today. I've got Kathy Boykin here is with me today too. She's from Wayforth, and she's going to tell you a little bit about her company. But she's going to be our vendor that I've got a preferred vendor that I like to host and introduce to everybody. She's a moving solution company. She's going to tell you a little bit about that company right now. Kathy, are you?
Thanks, Christopher. So thank you everybody for coming. I am Kathy Boykin. I am the account manager for Chris and his clients to assist him and you all in moving to the next chapter. It's exciting when we look to moving to another home, but it can also be stressful. And so we're here to take the stress out of moving. The initial consultation with myself is free, and my direct phone number is listed on your screen. You can also text me. But we offer a wide variety of services, so you can pick from as few as you want or as many as you want. We are able to come into the home with a complimentary consultation. I would provide you with a proposal based on your needs. We can offer downsizing sessions in case you're moving to a smaller space. I could do a floor plan of your new home such that we can make sure all the furniture fits and arrange it how you like, which speeds up the process of moving because when the movers come in, they look at the diagram, know exactly where to put your belongings. We offer packing. We can pack your entire house or maybe just parts of it. Then moving it, of course, from your current home to your new home, we can unpack, take away all the packing material in those unwanted boxes, and also put items away in the areas that you specify. And then we can come back after you've been there and want to settle in. So we can hang pictures, we can hang televisions. When we do your move, when we do the unpacking and settling in, of course, we're reconnecting any computers, and that would be done the day of the move because that's important. We offer storage solutions at our warehouse that we catalog all your items and put it in a vault such that if you need to retrieve them, they're easily retrievable as opposed to having to find in a 10 by 10 storage facility, where on earth did you put that table? And have to pull most of the things off to find it. And we can either have you pick it up or donate it. For people who are trying to downsize, we can deliver to family members your belongings. We can take to auction, disposal, or donation. And lots of other services that are really out of the way, but we do them anyways. So I'd be glad to help anybody and have a one-on-one conversation with you. You can reach out to me. Again, you can email me at kathy.boykin@wayforth.com, or you can call my direct phone number, 804-307-7007. Thanks for having me, Chris.
Yeah, sure,
Does
Kathy. Thank you
anybody have,
for. Yeah, if
did you
anybody
want
has any
anybody to
questions.
ask questions?
So everybody, I've turned your microphones off, but if you have questions, I'm not sure if you're familiar with how to send a text message, but I can also see if I can
Chat.
unmute for a second. One sec.
There's also on this a link, a little bit about Wayforth, if you wanted to click on that link in your free time.
Yeah, there's a good YouTube video down here too. If you have a chance to take a look at it, I can send anybody who's interested and you want to text me your information. I can send you this whole entire PowerPoint presentation so you can click on these links and get the information also. Well, thanks again, Kathy. It was great information, and we really appreciate you coming.
Oh, I appreciate you having me.
I'm going to get going here. For those of you who I see some new faces here, I don't recognize a few of the names that are here, but I am Chris Render. I'm with Hardesty Homes, and I'm going to tell you a little bit about myself before we get going. My family is a huge important part to me, so without my parents, I couldn't really be here today. And they continue to support me, and got a great family in Williamsburg and Pocosin, and we really have a great time. I've got two great girls. We do a lot of activities like hiking and swimming and art, and really enjoy having them. I actually just built them this tree house you might see in the background over here. Everything that I do here, including real estate, is all for them. Now, for me as a realtor, I've been here for 8 years. I've got a pending broker license. I just finished all my classes. I actually finished on Tuesday and just have to take the test for the state and national tests. I'm already a listing specialist. I've been I got that designation last year. I'd love to talk to you more about what that might mean for you if you have a home to sell. And then I'm also, for those of you that are investors, I was previously an estimator and an environmental consultant. Really good with numbers, and I love being analytical with the properties. So we can really dive down into some Excel spreadsheets and stuff, and I can help you best understand the value of the home, whether it's worth it or not for you if you're an investor. Moving on from there, let's do a little bit of trivia. All right, so go ahead and think about regarding residential resale. That's just normal homes for sale. Name some reasons why Zillow's Z estimate may not often be accurate for evaluating market value for a unique property. So think about that for a minute, and then I'll get you some answers. If you guys can provide me even one or a few answers why Zillow may not be accurate. Answer to this question. Here are some potential answers why Zillow could be different, or why it is not accurate. So land size differences between the comparable properties. Like if you have, I've got a property that's 5 acres, in a community where there's only a 1/4 acre properties. Well, Zillow doesn't necessarily look at the land. They actually just look at the square footage of the property and base it on market averages. So, if you have 5 acres, that's a significant difference in value. So if a seller is looking to sell their property and it's got 5 acres and the neighbor has 1/2 an acre, they're typically going to want to say, I'm going to want another $100,000 for my property because I've got a property that can be subdivided into other lots. A buyer has to recognize that additional value and understand when they look at the Z value online that the home is not going to be as cheap as what it says. The differences in repair quality between the properties. So if I have a super nice brand new construction home that's built in a community that is predominantly from the 1980s, then my home is going to be more valuable than the homes that are around me from the 1980s. And Zillow may not actually recognize that. They're getting better with some of their adjustments, but they can't quite get it right a lot of times, which is why you need a real estate professional to go and evaluate these properties when you purchase and when you sell. Same thing with condos and townhomes. If you have a condo community or a townhome community directly adjacent to a like a standalone residential community, oftentimes it skews the statistics. So your price per square foot average is different, or other things may be your the total size of the property. If you're 1,500 square feet in your home is 2,500 square feet, when the community itself is all predominantly 1,500 square foot homes, the price per square foot average is also skewed in that area too. So superior upgrades, is the property waterfront or not waterfront, or does it have is it adjacent to a super attractive area overlooking a bluff where the neighbors are not having that same view? Are you on a safe cul-de-sac where the neighbors don't have a cul-de-sac? All of these things can add value. A lot of these things are considered intrinsic value or very subjective, which makes it really hard to objectify, like why or give value to it. But a good agent can understand and interpolate that intrinsic value into a monetary figure, and that's where I potentially come in, and I'll talk a little bit more about that. So let's talk a little bit about the market first. This spring market from 2022, it was crazy. Post-COVID, through COVID and post-COVID, we saw about a 20% increase per year. 2019, 2022 was just really crazy. And home prices often were $200,000+ more than what they were in 2019. And then since I guess May last year, we've seen about a 20% decrease, which is what this shows here. We at the peak in 2022 came down to the beginning of 2023, about a 20% decrease. But and I'm not quite sure that this is accurate right here. I personally saw it being pretty low in the beginning part of the year through February, through beginning of February. But in the last few weeks, I'm starting to see the same kind of thing of 30,000 plus over asking price. Not quite as many buyers per property that were bidding last year, but it's still the most well-prepared properties are still expected to go over asking price. Now I say well-prepared properties because the homes that are not well prepared, and they still have some little cosmetic imperfections here and there, and I'm not little tiny things, but things that will stand out, like if the home needs new carpet, or the first time home buyer says it needs new paint, or if it has a certain smell. These homes are actually sitting on the market, and so I'll go to the next slide to explain that too. So this slide, it shows days on market. That's what I was just talking about. We're back in 2022. We see that these are basically 0 days on market. These things are selling way over asking price, and they just can't last. Nobody can even look at them. Now we're going into 2023, and we are starting to see a dip back down to a little less than what it was. But as an average, there are still plenty of homes that are sitting on the market. And those homes that are sitting on the market, the buyers are getting a little bit more picky. There's not as large of a population of buyers as what there were previously. We had probably, I'd say, so our best interest rate, we were about 2.25, as my client got a 2.25. And then now we're probably more like 6.35. So it's a lot of people that were purchasing with me last year were actually priced out of their ability to purchase. So now the only people that are left, you got a much smaller buyer pool, but you also have a lot lower inventory of property. So I'll talk about that right here too. So when you have a lot less inventory of properties, that means your sellers are also less. So the combination of sellers being fewer and buyers being fewer shows an overall significant decrease in the number of closed properties this last year. So a lot less people are looking. So then, we kind of go back to this first slide. Say, well, how are the home prices still increasing because we don't have the same kind of demand? Well, it's just that we don't have the inventory, or you might say the supply. And that's what this last slide shows here is the total number of homes that we have in the market. We were increasing because the homes were actually sitting on the market longer, and we were getting new inventory. But when the spring market just came around, the spring buyers are very much exceeding the supply that's coming along. So we are actually losing our supply at the rate that the buyers want to purchase, which is another reason why we have high demand versus supply, and we're once again driving up the prices. So you might remember that here for the next question, we're going to do another trivia question momentarily. Considering home prices are increasing again towards all-time highs, why are many sellers choosing not to sell? So here's some answers. We got the high interest rates. Sellers are basically saying, why sell when I can rent my home and keep my current interest rate? Again, interest rates are 6.35%, and they would probably have a home that could be anywhere from 2 to 4%. I think it's something like 75% of owners have interest rates that are less than 4%. So when you're talking about them selling their home and then moving to a new place where they're going to have to pay 6.25%. Well, if you got a home buyer who's willing to pay 6.25%, it's not really probable. That being said, if the seller is pretty much has a whole lot of cash, then the interest rate may not matter as much. We'll talk about that a little bit more later. Another reason why a seller may not sell is although the prices dropped in 2022 to 2023, more recently, a lot of that 20% was recovered. So we had about a 13% recovery from that 20%. That means that, if even still, most sellers are not selling because they're unclear about the future path of the market. Most are currently happy to sit on their homes with no expectation of an impending market crash. So there has been some news recently about a recession coming, and some people have expressed concerns to me about, will we have a market crash? And no, I don't expect we're going to have a market crash, and I'll get to that here in just a minute. So I think the sellers are probably right. Like, there's not a whole lot of reason to sell at the moment unless you have a whole lot of equity. That means if you have a lot of cash in your home due to the appreciated value, you can pull that cash out and buy something smaller for almost all cash, or you can apply so much cash to it to where the interest rate doesn't matter. Then that's still a good move. But for those that are, using they can rent it out and keep their low interest rate and get a cash flowing property from the low interest rate. They don't really have an incentive to sell. All right, so this is what I was just talking about with a recession. Some people are talking about, and I saw this on Keeping Current Matters this morning. They're talking about possible future recession. What does that mean for buyers and sellers? So due to recent banking concerns due to slowed inflation, interest rates are expected to remain relatively stable, if not decrease in the future. That means that there's more of a likelihood to decrease interest rates if we enter a recession. So basically what I was just talking about, if we decrease the interest rates, the top graph shows the changes in the interest rates. So these were all previous last 6 recessions. And with each change in those interest rates, we actually only twice in those last 6 recessions went negative in the home prices. So we get lower interest rates and a potential for, with those lowered interest rates, we may even have a potential for increase in home prices. Now, if our interest rates remain stable and don't move as we enter into the summer market, I think that fairly certain that the summer market is going to cool down the spring demand. Kids go on vacation, families go on vacation, and our current total supply of buyers that are looking to purchase a home for their family going into the school year, they just aren't there. So summertime usually sees a slowdown. Home prices typically fall. But when you get lowered interest rates, which I think could happen if we enter a recession, then there's a larger buyer pool that people who were previously unable to purchase at a certain price point are now able to purchase because of the low interest rates, and we get stronger demand again. So again, I think it's going to be more like one of these previous recessions where we continue to see a slower increase in home value or potentially even a stable market. So if you're waiting to purchase, it's probably not going to change too much in at least the next 6 months, I don't think. So trivia again, what is the difference between market value and market price? So market value, let me explain what market value and market price is. Market value and market price. Basically, market value, also known as fair market value, is the value that is reflective on your comps or your appraisal. So it's your actual, truly the market value. Like, people want to say, well, I don't want to pay more than market value. And, when we were back in an investor period of time, there's market value, but market value is reflective of what homes previously sold for in the last 3 months. When we run comps, we run an analysis on properties that sold in the last 3 months. Well, I just said I saw about a 13% increase in home values, probably mostly in the last 2 weeks, because it's the spring market. Early January, I didn't see much change in the market at all. So if we are not accounting for appreciation and just looking at, well, let me back up there for a little bit. Sometimes my comps will include homes that just recently sold, but I just ran comps for one of my sellers, and the comps were all from January, December, November. Nothing recently sold in the last month or two. So I have to actually factor in potential appreciation to help my seller understand where he can potentially sell. Now, on the other hand, when I go to sell a property, I talk about listing it at market value and not at market price. So let me get to market price first and explain what that is and why it's different than market value. Market price is where it will actually sell. Market value is the statistics, basically, where statistics or history has shown it will sell no problem. But market price is where it actually sells. So when I talk to my seller will say, well, hey, it's the spring market. Let's go ahead and list it at, $700,000. And I say, well, I'm only showing a value of a market value of $540,000. And so you can't really, and he says, well, there's such a strong demand out there. I'm the only one who has a 5-bedroom home in Glen Allen. And yeah, there is a very strong demand for homes in a good school district, but it doesn't mean that you can dictate that price so significantly, because then all your buyers are going to say, well, that's ridiculous because nothing that's ever sold in the area is ever sold for that much, and I'm not going to pay for it. So if we don't at least market the property at where things have statistically sold in the past, that seller is going to shoot himself in the foot, because the home will end up sitting on the market and not selling, and he'll end up doing price reduction after time. And even when it gets down to the actual market value, by that point, people will start to wonder, well, it's been on the market for 6 months. There must be something wrong with it. They'll potentially overlook it because it's been on the market for so long. And he probably would have been better off selling it at market value, where everybody will recognize that's what the value should be. And then you use demand from the population to expect that the price will go higher. Now, as a buyer agent representative, it's nothing that I desire to push the price up, but it's just my knowledge of the market that's what we're in. We're in a high demand market, and it's good to know. And I'll show you a quick trick that I do for a lot of my buyers to help them better understand whether the home is going to have a lot of offers. But we'll get there in just a minute. So who's buying? We've got home buyers and investors. My investors, I used to do nothing but investors. Again, as a previous estimator for the Navy, I'm really good at running Excel spreadsheets and running cap rates. I do a lot of commercial work. I do a lot of land. Personally done a lot of flips and buy and holds. But our investor market as of recent has really not been that great. There's not been a lot of good flip potential. Excuse me. There are still some successful flippers, but the people who are winning the flips are typically those with well-established teams, and are often just winning them in order to keep those teams busy until the market turns to where they can make a better profit. So I've not really had any luck making the big profits that we used to, or winning a lot of properties for my smaller scale flippers. Buy and hold is actually not as bad. There's a lot of homes that are being overlooked. When we go back to looking at the homes that are remaining on the market, well, this year, 2023 versus 2022, we're actually getting able to purchase homes less than asking price if the home isn't perfect. So, a large portion of our buyer population is looking for entirely move-in ready homes, and they're willing to pay a premium for those move-in ready homes. Whereas, like, if a home needs a little bit of a work, there are actually homes with equity that are on the market. So the ones with equity are potentially your best ones for buy and hold, because you can do a little bit to fix them up and get your maximum rent, and you'll also be able to beat out a lot of these first-time home buyers. So now, who are our home buyers this year? So we do have a lot of leftover home buyers. I wouldn't say quite a lot, but there are a few home buyers that are left from 2022, and of those, they are still aggressive. They were beat out quite a bit last year, and they finally have learned how to place offers on homes, and in order to win them. So the other new buyers that I'm often coming across right now are divorcees, relocation, newlyweds, new hires, retirees, and buyers with equity. Buyers with equity are the ones that are going to are most of the sellers that you're going to have that are going to relocate. A person who has a lot of equity in their home. So how to win a home. So I wanted to get more into detail on this, and I can talk to you all about it personally, but I'm going to show you a quick trick. One of the things that I like to do to at least help communicate to my buyer, what's going on with the market, and so that they can easily see I'm not just talking. There's a showing schedule. So when you talk to your agent about, do you know how many people are interested in the property? Here's a property that is actually actively listed as of today. And you can see that the showing schedule here is almost entirely booked. And it's just come to the market, which means that these Saturday and Sunday showings are going to be likely booked up also. They fill up quickly, and they often have language that says, we're going to review offers on Monday at 9 a.m. So when you see that each one of these showing appointments is half an hour, so with all of them booked, 40 different people looking to look at this property, and maybe a third of those people are potentially going to place an offer on it. Basically they want to confirm whether it looks as good as what's shown in the pictures. So you say, well, how do I win against that? Well, winning is your knowledge and your ability to understand what you're purchasing, why you want to purchase it. Have some understanding. If you want a high demand property, am I willing to pay more than asking price? And again, what we talked about as the market price or asking price is not the same thing as value. Market value or market price is where it will actually sell. I'll explain that some more. So reminder, market price is the price a home actually sells for, which is often different than market value. So market value should reflect the list price, and that's where I just talked about. I'll talk to a seller and say we need to list it at $700,000 or $540,000 in order to get you your best value and get the demand to the property. And then we expect that because it is a high demand property, it'll likely sell above that. So the below are some popular reasons why some areas across Central Virginia sell faster than others. The below are examples of intrinsic value that sometimes supersedes market value in a high demand market. So intrinsic value is important. What that means is intrinsic value is more of a subjective value rather than the objective value. So are you looking for a good school district? Are you looking for extra land? We'll talk about good school districts for a minute. I think this is one of the biggest driving factors of home prices right now. Again, the homes that are in good school districts are the ones that I'm seeing that are selling above asking price, sometimes significantly. I saw one sell last week. I think it was underlisted, but it sold $75,000 over asking price. But I would say for the most part, we're only seeing them sell a little bit over asking price, maybe $20,000. But these are the best school districts. So extra land and privacy. There's very few homes with acreage in our area. So those that do have acreage, I'm often seeing those selling at a premium. That's actually one of the homes that I referenced. So it wasn't just in a good school district, but it was an acre and a half of land in Glen Allen and Deep Run High School District, which is super rare. So that one sold significantly over asking price. Rare amenities, brand new or no maintenance. There are so many home buyers that don't want to be bothered with doing repairs to a property, so they're willing to pay a premium for new construction properties. Are you close to the river, close to downtown, close to waterfront, proximity to work? Are you walkable to the fan? The fan is always selling super well because you have all the restaurants and walkability to all the restaurant or to the shopping also. Tools, we talked about taking a look here at the at the buyer schedule. And then you want to also talk to your agent about running your CMA. Even though like there's a list price, sometimes the list price doesn't reflect actual market value. A lot of the agents are actually listing it a little bit below where market value is at. And market price is going to be, again, where it sells. But that's why sometimes you see it sell like 70,000 above asking price, because it's been underlisted in order to grab attention to it. So by running a CMA, you're going to have a better understanding of what at least market value is. And then you can make a determination. We can also look at statistics. Zillow is actually a pretty good source for their statistics to help you determine what appreciation has occurred to date. And I often pull an Excel file and can interpolate their current appreciation into the next, assuming that it continues at the same rate. We can interpolate what an offer might be. That makes some sense. Okay, so what is my risk if I pay more than asking? This is something that any home buyer should know. So we are nearing again the top of the market. If, let's say, last year we did end up dropping 20%, and we have an oversupply of homes this year, which we don't, but if we did, you could be out 20% from your max purchase price. Now, how much of this is an issue for a person who's looking to be in a property for 10 years? Well, it may not matter so much, because you're going to pay down the property. Like right now, if you're currently paying rent, you're going to be 100% of what you make goes to pay the bank. If you are paying a mortgage and you pay that mortgage for 10 years, you're going to be paying a significant amount of money on your property. And the 1 year of a dip may not really have a long-term effect. So that being said, if you happen to leave and you need to be relocated, if your job doesn't pay for your relocation, then you may have some risk there. So we have to understand what your intentions are before you place your offer, and whether you do intend on staying in the property for a long period of time. If you need to stay in the property for just a short period of time, we would have to try to see if we can find you something that is a little less risky, maybe one of these homes that are not as high demand, that are not move-in ready. I like my buyers as much as possible to look at the homes that are requiring a little bit of work. If you're up for doing a little bit of paint, you can get some good equity in homes at this moment. So trivia: why might people be paying more than market price or list price? Answer: because of strong demand from the buyer populations that have a highly value intrinsic reasons for purchasing. So strong demand, that's the biggest thing, is there's a large population of first-time home buyers that are valuing properties based off of intrinsic reasons, like all those things that we just named, like good schools are one of the biggest things. So how much do you want to pay for your kid to go to the best school in the area? You either pay a private school, or is it better for you to pay a premium through a mortgage to get them into a good school district? That's all that I've got for right now. I intend on doing some more of these get-togethers. If you have any specific questions or topics that you want me to discuss, I'm happy to talk about those in the future. I do a lot of commercial work and investment work, and do a lot of cap rate or rate of return for you. I can run some tables for you and kind of walk you through that process, or have individual meetings for you. So thank you all for joining. I appreciate your time.